Hey, good afternoon, everyone. It's 11:50, September 17th. It is, what is today? It's a Tuesday. I'm doing a quick little midday call. Read the disclosure, please, before we get into some of the charts and some of the technicals before I head out to the gym. A lot of guys are like, Red Dog, how do you, it's just, Red Dog, how do you, get up so early and how do you get your routine going? Actually, let me put this on so you can hear. Hopefully you can hear now. Red Dog. Um, how do you have that happen? As I saw you guys at the Jet game last night, it was 11 o'clock at night, and then all of a sudden, you're tweeting at 4:45 in the morning. When do you sleep? Well, that's true. I definitely could sleep more today. I'm feeling a little tired, but so what I do is I come in, I do all my chart work, I write my note on my way in, starting on the ferry from 6 o'clock, and then at 6 o'clock, I'm in the office by 6:30, and then I'm still doing it by 7 o'clock. I'm checking in with the virtual trading floor, talking to probably a few hundred traders that are all talking about what the levels they're seeing and what's happening. And then by 7:30 I send my note to editing because my grammar's not great, which a lot of you guys correct me here and there. I always get, and if you guys get the grammar police, like what do they do? Do they get paid to be the grammar police, or they just want to mess with people? But anyway, I've learned how to do better than or better than sometimes. Otherwise, he fixes it. And then by 8 o'clock, I'm doing this kind of video, a morning call, where I go through all the charts and I talk about the levels and things I'm seeing and what I might do, all my if-thens. And then it's all of a, then what time is it? It's usually by like 8:40, and then I start taking some of the charts I went over and I post them on Regular All Access, and some of them I put in the public Twitter sphere. And then at 9:10, I go sit at my desk, stretch a little bit, put the headphones on, and I talk as I trade from usually 9:30 till about now. So now I do have some positions on. And yes, you can have positions on and that's in front of your computer, but you just put stops in places where the trade shouldn't change. So that's what I'm going to focus on today is, where did I put stops in, or where, depending on your time frame, would you put them in if you were sitting in them also. But at this point, let's just go right to the chart of the S&P cash. If you look here this morning, I was like, we can't get too bearish. If we could hold 29.90, which was yesterday's low, or even the 8-day. So the 8-day is moving up. We have a decent looking flag here. 3002 is yesterday's high. So we're right about there, like 2 inside days ahead of the Fed. Pretty constructive action. The small caps finally had a bit of a pullback with the banks. Some tech had a bit of a bounce, so things are kind of balancing out a little bit. The energy names that were really strong yesterday did get hit fast, and a lot of the momentum guys who were looking for an overnight play probably got a little bagged, meaning they were just in there because it was volume and then they closed strong, and if they're not up the next day, they have to get out some way because they're uncommitted, and then they went into those gaps. So let's just get into it. So here's, at this point, above 29.90 in the afternoon. If things want to close a little stronger, it's got to get above this 3002, which is yesterday's high, and then you get above 3002, then you have nothing really until into this area, which is 3017, and this is 3020, and that's your all-time high. The Qs hanging out this morning. Again, everyone's like, look how lethargic tech is. I'm like, yeah, it kind of is. It's not really a headwind yet. Maybe you go long versus 191.11. The low here was what? 191.29, above 191.11. So if I'm saying, okay, Qs are down 30 cents, you could be a buyer versus 191.11, meaning you're buying it versus the prior day's low. So this way you know where your point of reference is, and then you put that as your stop. And here, today's low is 191.29. This was 191.11, so it's 18 cents. And where is it now? 191.90. Not a big trade, but 60 cents or so. And then obviously some tech names did better. And now it's still hanging in here. There are still some bears calling a double top. At this point, I don't think that's a what's the word? A valid thing to say, but. Here's your 8-day, here's your 21-day. You can even see the 21-day and still be deemed fine. But if you want a faster move, you have to hold higher, and this is just fine. So let's get to the IWM. The IWM, look at that. As weak as it was this morning, if you would have pressed this morning, you were in trouble. And now look at it; it's flagging. I think a lot of traders who were caught in a little bit of the pain trade short. Into this little time period probably said, okay, I'm kind of done with this now. So it goes sideways a little bit. This looks like you could take out the upper end of the channel. Fast and furious move to here. Now it's digesting. A decent looking bull flag gets above this. 161 is your next point of reference. Then you have to go all the way back to here to see where the high was from 2018. So that's why I don't want you to get stubborn here because um, I know we're not in a crazy growth environment. The Fed is going to cut rates a quarter most likely. So why be in small caps? Well, chart saying there's buyers still. I talk about when you're below the 8 and 21 day, which happened right after this red dog reversal, you're out of the way from 155 all the way down to 144. That's $11 of out of the way. And then finally, it switched gears right here. People like Red Dog, you talk about active sequences. How did this one start? Well, here was your gap up. This day looked a little bearish, but then got reclaimed right here fast. Or engulfed right here fast. So this is right here, this 3-day sequence above this gap, above this small detailing line, that was your spot to say, okay, I'm done shorting the small caps. Maybe let me look to buy. If you didn't do it there, here's your spot. Let this 8-day catch up a little bit, maybe one more day, and then perhaps it goes again. JP Morgan, nice little move down. I actually, look, guys, I do lose money. I started shorting it on this day here, and I got squeezed out here, and now look at it. Happens. Guys, like, where could I have seen for the future of making a switch here? Just like to show you the 2-year range. Look at this 2-year range. Pushed above it, came back to it, so now it's retesting this 117 area that was so big. So, if it holds here, that would be good for the banks. It could even go a little bit lower. But anyway, how could you have switched gears when the bank rally started? Well, here was your gap up into, then a little follow through into resistance, came in, filled the gap. So right there, that wasn't, and it didn't really come all the way down. 50% of this range really on this day would be a day that I would say, hey, you better be careful. It didn't fall apart. It's now above these moving averages. Next time it gets to resistance, it probably goes through. And what did it do? It gapped above it, and then it's been above the 8-day since. So besides a cute little trade, what do you want to do when you're above the 8 and 21 day? You try and buy dips and be long. So let's move on. Tech. What am I in and how am I dealing with it when I'm about to go to the gym? Well, I'm in Apple. I've been in Apple since last week. Apple, I was in it from this first spot here when it held the 8-day and had a nice move into this doji, which was the event. I didn't want to be long it on the event because of the volatility that happens, but then I did buy a lot of it here, and then we caught a nice 3-day trade into this topping little move, and everyone's like, Red Dog, why are you still in this? It has a topping tail. I'm like, you know what? It's extended from the 8-day, but I had a lot and I have a little, so I want to stay really engaged. Sometimes you have to pay to be engaged in a name. You don't have to be perfect, because sometimes if it kept going, you're out of it. So I said, you know what? I'll take some pain in Apple, but I'll be engaged in Apple. So on this topping tail, I went home long. All of a sudden, Goldman Sachs downgraded. And remember that on Friday morning. And I'm like, hey guys, let's look and wait for the 8-day. And I think I even tweeted it to Rather All Access. I'm like, let's look at 216.75 to 217 and a quarter. And that's pretty much what happened here, believe it or not. I'm not lying. This is what happened, 217. And then midday, Apple came out and refuted it. And remember, I was like, I would believe Apple a little bit more than Goldman. And then yesterday was a nice buy in the hole. So I bought some. And then today I bought some Verse, this 217. So I have back to a much bigger position than I had here. And now I'm hoping, I hate the word hope, that we'll be able to get an add above 220.79 to fill this gap. So, being like, just say, so how do I do that? Let's use a tier system. That's a tactic that I talk about all the time. So just say you're comfortable holding 500 shares of Apple. You don't like to hold more than that, but then you trade more. So if you're holding 500 shares of Apple in this spot, let's get rid of this now that I talk about all that. All of a sudden, coming into the end of the day, it's holding up strong. Market's coming in and it's showing relative strength. And then all of a sudden it gets above 220.79. You're buying another 500 shares because it's in the gap, and then all of a sudden it goes to 221. You sell out 200, goes to 221 and a quarter. You sell another 200, goes to 221.30. You sell the rest of that 500, and now all of a sudden you're here at 221 and a quarter, and you just made money on an extra 500 shares, but you still have the 500 shares from here, but you booked some money. Now you're comfortable, and who knows, maybe it fills the gap up to 222.86. So that's how I would use a tier system. If you're in 5,000 shares, maybe you add 2,000 shares. It's all relative. So that's that. I'm not in Amazon. Amazon is acting a little bit better today, but to me, it's been so lethargic and such a pain in the culo that I'm waiting. So what did it do today? It held 1800, which is semi-constructive for this name for now. You could almost slant this down a little bit like this. I would think at some point tomorrow with the Fed, you know, it probably fills this gap between 1825 and 1833. It did hold kind of where it has, so it's still lethargic. I only like sitting in Amazon when it's leading and special, not when it's lagging and funky. So as of yesterday, it was funky. Now it's just lagging. A little bit of relative strength here today. We'll see. I'm not back in it. I am in Netflix, and actually, I don't even know if I've been stopped out because, oh, let's talk about the stop in Apple. So really, your stop in Apple either on a micro level needs to be below today's low of 219.12, but the real stop really should be 217. There's no reason why you should be stopped out of this unless you're in tears, unless it goes below 217, because that means the trade changed. Okay, but for right now, it's strong. So let's see what Netflix is doing. Oh, Netflix is still hanging around. So this to me is very interesting. Obviously, big gap down. This was your first little squeeze into the gap and then failed, and it's been in this descending channel all the way down. Now, for the first time, it's trying to really poke its head out. It's holding this spot. So I am in long. I got long when it went green. I actually bought a little bit, thinking it was going to get through this 297 area. This is what? 297.43. What did it get to today? 297.20. Where is it now? 295.17. That kind of, so it's not really doing much. It's in the middle of the range. So, when it's in the middle of the range, you're in shares what middle of the range is. So just say, maybe for you, I don't know what that is for you. For just say, in the morning when it's down $1 and you're like, is it going to go green? You buy 500. Goes green, pushes up $1, you sell 300. Now all of a sudden it's trading around. You're like, wow, I'm sitting here only in 200. I want this thing when it breaks out. I need to own 1,000 or I need to own 1,500. Right now it's not breaking out. It's not in that trade. It's right now it's in its incubation stage where you're buying at versatile level while you're waiting, and then if it gets through a level on volume, that's your pickup. So for now, I'm I'd say I'm in a tier one, and for today, okay, if you got long today, your stop really could be 291.79. You can move it up. If you're not active and just say you're like a doctor or a lawyer or a policeman or a fireman and you're like, I don't trade every day, your stop really could be here, 180, 282, okay? Or this low here, which is a little looser, that's 289.78. But if you're in it for today and you think it might close strong, it really shouldn't get below today's low, so you're giving it that much room. And if it happens to trade above this with some kind of volume and some kind of authority towards day's end, that is your ad. But again, we'll see. It's now kind of on the right side of this, going sideways. I'd love to see some kind of better move and up to here at some point. I remember I was doing the same type of trade in Tesla a few weeks ago. And it was like kind of right here where it was descending channel, then started to go sideways. You could have bought here and then boom. And now look at this, a little red dog reversal today. What's a red dog reversal? Well, here, look at that. From 253 down to here, traded below this prior day's low. This low here was what? 241.17. 241.17. And traded back above it. So if you sold strength, hey, look at that. You could buy a red dog reversal here, and now it's calculated with a stop at the low. And I'm doing my charts with you guys. I'm teaching you as I go. I'm just right off the cuff. This is actually a perfect red dog reversal. And you could have been targeting the 8-day because it was extended from it to pull back. So now you're pulling back to the 8-day, which is the momentum moving average. You're 4 days down. That's a good focus. I don't know why I didn't focus on that today. But anyway, pretty good. It also had a descending channel down here where, descending, then finally, went a little sideways, and then that was the first move before this one. So we'll see what happens with Netflix if it finally could wake up here. We'll see. Just because it's Netflix doesn't mean it's going to happen, but, Netflix is Netflix. Isn't that so profound? So where did I make some money today? Snap. I've been long Snap from last week. It was acting fine, not special. Fine means decent pattern, still building, no traction, but yet a level to trade against. So that was Snap. So here's Snap. This was the day I re-entered. I got stopped out here. Looked like it was going to break out. Failed at 1590. Got out. put a low in, bought versus low, and I came in long today. And now how high was it? It was high as 1666. Snap was upgraded this morning. It acted better to get special. It needs to get and stay above 1615, which was right here, which it did get above. So now we'll see, does it close above here and then start working its way back up. This 1664 was this point of reference over there. And this was this one over here. What was this morning? 1666. So kind of right around there. But why did I get back in it? Because it was calculated by this versus that, and then it started getting better, and then you finally had a little bit of an add-on trade. And I'm still in it. Twitter, is acting a little different. What do I mean by acting a little different? Well, it finally had its breakout, and it kind of failed. So that gave me one clue to reduce my size from a bigger position, thinking we're going to get a multi-day breakout to that was right here. When couldn't go, broke below the prior low, that got me, less. Then it bounced off the 21-day the first time, got sold into resistance, and then once it broke this spot, I'm like, I'm going to get out for a little bit. Made a new low yesterday, so if you sold here or here, you could have been a buyer at the when it reclaimed this level here, which was a red dog reversal at 42.33. Put that low in at 42.19, and today it bounced, but instead of powering through, again, rejected this time at these areas. So Twitter to me still needs time. So I would love it and leave it. That's what I say when you're just trying to take trades based on the morning ranges. The best stock to do that has been almost Roku lately. Every time it's down $2, it goes green, goes up $2. When it's been up $2, $3, it goes red and goes down. So that's great cash flow if you look for a divergence using relative strength in the first 5 to 30 to 60 minutes. Before I head out, because it's getting a little late, Roku, it's still hanging in here. Actually, this looks pretty interesting. Roku is pressing up against the level that if you can get above this 152.85, maybe I could see it move to 158 and negate the strength of this follow-through day to this red dog reversal sell when it put its short-term top in before consolidating. But this is an interesting spot. It's 1207 on 917. If you were short, I'd be careful into this area because it could pop through. And if you're looking, saying, hey, I'm buying versus 21-day because it's still strong if it holds a 21-day. It just lost a little momentum up here as it got extended after this big power gap and as it held the 8-day the entire time. Now see if it pops above this, and could be an afternoon trade. So with that said, I'm going to get going. I just want to do a quick little public midday call just to say, what up? And I'll see you at the recap if you're on RAA. If not, I'll try and post a chart or two. And, and I wish you the best of luck. Have a good afternoon.